morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Thursday, March the 6th. Well, mostly higher trade across the ag space overnight as prices just continue to try to recover from the drubbing we've taken here in this late February, early March timeframe. Trade headlines continue to drive the day-to-day market volatility with late yesterday, the Trump administration suggesting they may consider exempting certain agricultural products from the tariffs imposed on Canada and Mexico. So we'll see if we get further news along those fronts later today. Soybeans have been the upside leader. Now they're drifting back a little bit, still three to six better, let's call it. Meal is up $1 to $2, while bean oil is 15 to 20 higher. Feed grains have drifted back here a little bit, still a little bit higher here in the spot corn. Nearby new crop contracts, however, are down about 2 cents, steady to lower in about a penny in Chicago wheat, while both Kansas City and Minneapolis are still up ever so slightly. We do get export sales later this morning. Yesterday's EIA report did show ethanol production rebounded to 321 million gallons. That was above the pace needed to reach the USDA corn usage estimate of 5.5 billion bushels. I look for the USDA to raise its forecast 25 million in next Tuesday's WASDE report. I also look for a 25 million bushel increase in exports, which would allow ending stocks to drop to 1.49 billion bushels. And that's about 25 million bushels below the average trade gas as reported by the Reuters survey. I see no changes to ending stocks in either soybeans or wheat, leaving them at 380 and 794 million bushels respectively. And that too very much in line with the Reuters estimates. Basis levels in Brazil continue to firm for the soybeans. That leaves the prices between the U.S. and Brazil that continues to narrow down to about 25 cents a bushel, where in late January that was as wide as about $1.10. Yesterday, Solaris, they lowered their Brazilian production forecast nearly 2.5 million metric tons to 171.6, and that is versus USDA forecast at 169. A figure I do not expect will be changed next Tuesday. The only change I have in the South American production is another 1 million metric ton drop in the Argentine corn, taking production there down to 49 million metric tons. Heavy rains that have brought isolated flooding to areas in central and southern Argentina will gradually wind down here by this weekend ahead of a much-needed drier pattern. Some rains may stretch up into the northeastern areas of Argentina. However, by no means a drought breaker that would bring only just modest relief to crops and crop stress in that region. In Brazil, a much drier than normal outlook continues for east central and northeastern agricultural areas, and that's likely to stretch into the middle part of February. Most weather models have a favorable mix of rain and sunshine across key growing areas in the north central areas, but however, one model is leaning towards a hot, dry pattern developing by middle March. Nearby corn futures, they did end a streak of 8 consecutive lower closes yesterday. Key resistance for the May contract rests just above the market at 463.25. That's a 100-day moving average. Resistance for May beans is at 1029. This after rejecting trade below $10 earlier this week, after holding contract lows earlier this week. May meal is back above that $300 level this morning. Major overhead resistance in that 307 to 310 area. May oil held key support at 42 cents yesterday as it consolidates near 43 cents currently. Wheat trying to recover from contract lows earlier this week. Rains across the Midwest this week should benefit the soft red winter wheat crop. Continued dryness in the southern plains, or more erratic in the southern plains, and dry conditions across the northern plains. Look for deepening drought conditions there with today's updated drought monitor. Thanks for listening, everyone. Have a great day.